Welcome to the Good Growth Podcast, brought to you by BGF, the most active equity investor in the UK and Ireland. This week, Jimmy is joined by Dob Todorov, co-founder of HeleCloud, an IT consultancy and managed services provider, alongside BGF Investor Alex Snodgrass. Dob shares what inspired him to take the entrepreneurial leap, how BGF's investment played a pivotal role in accelerating HeleCloud's growth journey, and some of the most valuable lessons he's learned along the way.
So just going to start by asking you what your name and company is, or company was, I suppose.
I'm Dob Todorov. I was co-founder and the chief executive officer of a company called HeleCloud, supported by BGF in the early stages of the business, and then further on in the much later stages of business as well.
And Alex, what's your name and what's your role?
So I'm Alex Snodgrass. I'm an investor at BGF, and I lead on technology and business services here in London.
And why did you call the business HeleCloud?
That's a great question, and we actually never came up with a good story. The truth is that we actually spent a lot of time looking for a .com domain that sounded good, and it was at that point that Simon Rendell, who was an investor in the business and became our legal counsel, said, "You know what? I've got a database of registered trademarks, and some of them have cloud in them." And HeleCloud was the one that we went for. We didn't even know what it meant. At a later stage, we figured out it meant everyone in the cloud in Norwegian, but that was much further down the line. We kept repeating that we need to come up with a better story than this, and we never did. Fortunately, Alex did we?
I did ask the question.
I think we did, but
And what did HeleCloud do? Perhaps we should get Alex to answer this first.
Well, HeleCloud was tied to a large hyperscale cloud provider, AWS, and they were providing solutions for companies to move from on-premise technology to operating on the cloud.
Okay.
And I guess from my perspective, the difference versus others was, rather than providing companies with people, they actually help them deliver a solution and actually help them manage the solution once it was delivered. And at that time, we think about now, and that's kind of very common, but you roll back to 2018 or 2016 when you started it, this was a very different approach.
And how did the business sort of change over the years?
It changed a lot because I think with the benefit of hindsight, I can always look at HeleCloud and said that had always been our intention. That was always the journey that we envisioned. And the reality is that it wasn't so. In the early days of HeleCloud, we envisioned it as a technology consulting and managed services business, and pretty much looking to build a business that resembled many of the well-established managed services providers on the market. But when we started, and the first customer engagements actually took us in a very different direction, and it was through the learning curve that we had to go on, that we managed to find ways of evolving HeleCloud and building an organization which was much, much different from what we initially thought it was going to be. For example, in day one, we thought that HeleCloud was going to be an infrastructure consulting and managed services business. And when we exited the business in September 2021, we were actually a cloud transformation business that had management consulting, that had cloud native software development capabilities. And we had a story around all the building blocks of the business. And these were not the things that we had envisioned back in 2016. So very proud of what we ended up building, but that wasn't really the vision on day one at all. We evolved our vision for the business and effectively built it over the following couple of years.
Because you had previously worked at AWS.
Indeed. I joined AWS in the very early days of the business, when there was a very small technical team. There was 5 of us in Europe. And I became the principal architect for security and compliance, and then regional technology officer for public sector when AWS launched their public sector business in Europe.
And when was that?
That was between 2011 and 2016. That's when I joined AWS and spent the following 5 years building their capabilities in Europe, first of all, from a security and compliance perspective, and then from a technology perspective, focusing on public sector customers.
And when did you think, I'm going to go and have a crack at doing this on my own or with other people? You've got this huge multinational corporate behind you, one of the world's biggest companies, AWS, probably a very comfortable, enjoyable life. And you think, no, I'm going to do it myself. When did you decide to do that?
Comfortable and enjoyable life, comfortable and enjoyable, not the adjectives that I would use for the early days of AWS. It felt like a very dynamic startup, and there was something new happening every day. It was very interesting, and I'm still very nostalgic about the early days of AWS, but at the same time, wasn't necessarily comfortable at all. We were always on the edge. There was always something new happening. So we were busy developing a new cloud services business, which frankly didn't exist at that point, or what did exist, but was mostly geared towards startups, and enterprise organizations were not even dabbling into cloud at that point. They were watching from the sidelines in the early days of cloud. 5 years in AWS, the business had changed a lot. As I said, when I joined, there was 5 of us from the technical side of the business. By 2016, there were 1,200 in 22 sales and marketing offices around Europe. So AWS was a much bigger business. And of course, we had built a fairly significant capabilities. I had a strong leadership team underneath me that was able to continue to grow the business. And it was at that point that I felt that probably a good opportunity to embark on another journey. I was still a very big believer and continue to be a very big believer in cloud. But that was the journey of stepping out of a product company, which is the focus of Amazon Web Services, and going back to things that I had done in the past. And that's building end-to-end projects, engaging with customers, discussing their requirements, and then driving a cloud transformation journey for these customers, but with full control over the delivery and the outcomes of the projects. So it was at that point that I decided to leave AWS, but continue to do only AWS, as Alex said, across the street. And we established HeleCloud offices actually in Maidenhead first, but then just opposite AWS, and continued to work very closely with them and complemented the products that they were putting in front of large enterprise customers by allowing these customers in a very contextual fashion to derive the benefits of cloud.
So when did you start the business? When did you move into Holborn Viaduct?
We started the business we established the business in June 2016. Our first day in the office, which was at that point in Maidenhead, just by the train station, on the 13th of September, 2016.
Okay.
And we moved
June 2016 was quite a big moment to sort of start a business in the UK.
It was indeed. We established the business a week before the Brexit vote. And I remember the first board meeting the following week. And yeah, it was a tense moment, I have to admit, yes.
And your local member of parliament became prime minister. So
then indeed, a local member of parliament becoming a prime minister as well. Absolutely.
And Alex, when did you first meet Dob?
So it got introduced to us as an opportunity by Duncan McIntyre, who was the chair of HeleCloud. We'd worked with him on another couple of opportunities, hadn't actually managed to get a deal done with him. But he mentioned really interesting small business. Would you like to come and meet? And then I met Dob probably June-ish in 2018, something like that. And we ultimately concluded the deal in October 2018.
Okay. So how long was the sort of the period of getting to know before investing?
Probably, what's that? Probably 3 or 4 months. Just in terms of
quick then.
Yeah, it was quite quick. I think what struck us and what made us get comfortable quite quickly is the team that formed, the founders, had a really good track record. Obviously, Dob's CV, second to none in this space, and a group of people who made money in the past, scale businesses and made money. So for us, it was we knew Duncan and got to know the team very quickly, and spent some time in Bulgaria, which was also good, allowed us to get very comfortable with the investment quickly.
Yeah. And what kind of things are you looking for when investing in a tech business?
I think I'll talk about it in relation to HeleCloud because there are lots of themes that are relevant. So I think break it down kind of people, product and processes. I think from a people perspective, it's all about reputation, expertise in the field, which HeleCloud certainly had. It was a kind of employee-centric culture, and there was a real kind of startup culture to this business, and it kind of married the AWS client base, which had typically tended to be kind of the startup orientated or very kind of forward looking in terms of the technology they needed. That kind of matched well. I think there's also this kind of focus on kind of being dynamic and kind of a focus on learning and kind of as through that journey, as Dob says, the kind of the proposition changed and the market was changing at the same time, where software development was kind of very core to where we wanted to be. If we wanted to be at the kind of leading edge, that's what we needed, and that's what we brought into HeleCloud. And then you looked at the kind of the products. When we think about a product in the sense of a services play, in my mind, it's around technical capability, thought leadership in the space, and that's what Dob brought, and that's what the team brought. That we were generally backing a very, very strong technical team.
Yeah,
and then we can help scale businesses like that by adding the kind of the process element, the sales and marketing capability. But you kind of need that technical core, and I think that's exactly what that
they
team
got.
had. Yeah.
And so is that some of the expertise that you kind of bring along as BGF then, the sort of sales and marketing side? Is that something you would agree with, Dob?
Yeah. So from our perspective, going back to that kind of process bit, most businesses, as they scale up, kind of have kind of the core processes in place. And what we try and do is help kind of move them on to the next level, whether it is sales and marketing, whether it's systems, finance, whether it's using data better in a business. The team was really good on that and had solid foundation, but we knew we needed to invest in sales and marketing, and that's what we set about with the team.
Because for a while, for the first couple of years, you were bootstrapped, right? And you were growing solidly, you got revenues and so on, but you basically faced a bit of a crossroads moment of, do we sort of turbocharge this or do we carry on? Talk us through your sort of thought process frameworks for when you did that.
Yeah, indeed. And when we launched the business, funnily enough, even in the shareholder agreement, which we signed in late June 2016, we were very specific about the fact that that was a business that we were building to sell. And that was the agreement with the co-founders and the investors in the business. And actually the people that invested in the business, I converted into executives in the business as well, convinced them all to roll up their sleeves and become executives. And all of them remained with the business until exit. But in the early days of the business, it was very clear that we were building a business to sell in 4 to 5 years, and that was even part of the shareholder agreement. So my focus for the following 5 years really remains on being true to what I had promised everyone else that I took on the journey. And it's a very difficult thing to do, because sometimes you need to make decisions, and these decisions don't necessarily go in a current fashion towards the direction of travel that everyone else expects you're going to. So finding the right balance between growing the business and of course making sure that the business continues to exist, having employees looked after, as Alex said, that was a very, very important part of our business. Well, looking after customers, and at the same time making sure that we also address the needs of the shareholders and remain true to what they promised was always a difficult challenge to balance to find.
Because you mentioned earlier, your first customers almost influenced the kind of product offering that you were coming out with. Just unpack that a little bit for us.
Indeed. And I'll probably step back a bit and tell you a bit more about the way we developed the business, and here's the interactions with the early customers as well. In the early days of the business, the market was such whereby the majority of the customers were looking for skills. There weren't many specialists on the market that understood cloud services well, whether from an infrastructure, from a software development perspective, what are the business aspects of it. And therefore, pretty much all the prospects and customers that we spoke with were actually looking to augment their existing teams, and they were looking to to hire, if you wish, individuals from HeleCloud on their teams for 6-12 months and effectively embed them into their organizations. And such staff augmentation was very common. 99% of our competitors, which were very successful organizations measured by their revenue, the number of employees, would actually go and engage in such types of projects. And that's what we did in the early days of the business as well. But at the same time, our vision was that cloud is not about people. It's not about day rates. Cloud is about outcomes. And that's why from day one, when we spoke to the customers, we would actually go and say, forget about the number of people. Don't worry about day rates. Then let's focus on what is it that you want to accomplish, and we'll find the right composition of team that is going to engage with you. We're going to include the right people at the right stages and then let them drop off the project and continue to work on other things. But let's focus on the outcomes, on the specific things that you want to have built, because ultimately that's what you care about.
That's a difficult tension for a lot of entrepreneurs, though, that are in that kind of consultancy stroke product space, right?
It is very difficult. And also it was much more difficult in those days because customers would normally resort to hiring bodies. That was much more natural to them. So we were effectively going against the grain. We were trying to sell them something that they were not buying. And that's probably one of the big mistakes that we made in the early days, that we insisted religiously on being focused on outcomes, and that was going against customer requirements. We still had the best intentions, and I believe, and obviously, as I said, benefit of hindsight, that's proved to be the case. But in the early days, we were effectively going against what our customers wanted from us, and that introduced a lot of friction in the process, and was a very, very difficult sell. By year 3 or 4, which is when BGF had already joined us on the journey and we were growing the business, it was clear that there is customers that would engage in such types of projects, and these were the ones that were more successful, and there is others that wouldn't. So we were much more selective, and our sales and marketing approach was adjusted to these new types of customers. But yes, HeleCloud was designed and continued for the following 5, even 6 years after the integration with SoftwareOne to continue to be an outcomes-based business, which was focusing on what is it that customers wanted to achieve, and not how many people, what qualifications, what day rates would that take.
So if I can sort of summarize that, a company sort of in the early 2010s would have a lot of data, a lot of information kind of stored on folders in hard drives in desks. And what you essentially did was, like, there was this cloud revolution taking place. Companies probably know they need to be involved in it and need to update their systems. And you partly had brought consultancy, but also the products and systems about which brought best value to their particular businesses and where they were going. So it was like a mix and match of consultancy and products and services.
Yeah, indeed. That was exactly what we were doing. Amazon Web Services, and then at some point, Microsoft, their Azure platform, and then Google with their Google Cloud platform were already operating at scale and introducing new services on the market. But it was obvious that despite all the benefits, which included much higher security and compliance, cost efficiency, much faster time to market, infinite elasticity as well, all the benefits that a business, whether small or big, needs. These benefits were there in the clouds, but still people were running their applications and systems in the old data centers, and the migration, the gap between the benefits and where they were was fairly significant. What HeleCloud did was bridge this gap for these organizations in a couple of ways. First of all, by 2020, we already had a management consulting team, so we were in a position to engage with customers and help them understand the benefits of cloud from a business perspective and put them in the specific business context of these organizations. Understanding the business benefits, which we led with management consulting, would normally result in large migration and transformation projects, where we would take existing infrastructure on premises as well as applications, redesign them for cloud, optimize them to make the most of cloud benefits, and then carry out the actual migration from data centers into the cloud. And once customers were in the cloud, we were in a position to operate such environments against a set of very stringent KPIs and service level agreements, including from availability, security, compliance, cost efficiency perspective. And we established a set of highly productized, still compliant with conventional IT service management, but very powerful and embedded in the cloud capabilities, which allowed us to operate mission critical customer systems 24/7. And that's where we developed a set of products as an organization to provide the glue between the old world and the new world, as well as to operate the cloud managed services system in cloud.
Okay, right, I get it. And so enter BGF at this stage then. So talk us through a little bit, unpack this bit more about the kind of like bootstrapping. You've got revenues. Give us an idea of the kind of revenue stages you were at, and then how you went out and sort of saw investment, etc., and how it was from your, we've kind of heard it from Alex's side, but give us it from your side of things.
In 2018, we were probably a 2-3 million pound business at that stage.
What, annual recurring revenue?
Annual, not necessarily recurring revenue, fast growing revenue.
Okay.
Part of that was recurring through our managed services and cloud consumption businesses,
okay,
but a much bigger professional services business. And that's really, before I answer the question, I think it's really important to understand that before one gets to the point of recurring revenue, there has to be a lot of migration, redesign, restructuring taking place.
Okay.
And only then, once you've moved it to the cloud, and in our case, we were purists, we would only do public cloud and only AWS. So therefore, a large amount of transformation and migration work had to take place before we could get to operating such solutions. So the recurring revenue took a while to get to, but by the point when BGF joined us, we had already had a fully fledged 24/7 managed services team with early stage productization and managed services platform. Probably had around 20 or 30 customers by that point, and probably 40, 50 employees must have been.
And give us an example of some of those 20, 30 companies.
Some of these companies included large organizations, and some of these companies, of course, were startups. But many of these organizations are household names. Some of them remain not necessarily referenceable, but for instance, we partnered with CGI for the purposes of delivering smart meters to people's homes. And if you've got a smart meter at home, it's very much likely that the backend infrastructure was part of HeleCloud, for instance, and that's one of these references. And on the other end of the spectrum, we had startups which over the years became very significant organizations. Viber, for instance, was one of these organizations. If you've come across Viber, which was a much bigger platform before there was WhatsApp, a business that we engaged with in the early stages, and then they continue to be our customers through their acquisitions by Rakuten, and by that point, they were already a platform with more than 1 billion customers. And we had various such organizations all the way from startups to large enterprise public sector organizations as well. But our sweet spot indeed was upper mid-market, because that was the fastest moving part of the market migrating to cloud.
And it's probably worth saying that kind of 2 to 3 million for a services business is quite small for BGF. But the reason why we actively said we want to get in early into this business was going back to the quality of the management team, quality of the proposition, and kind of outlook for the market, because I think it was about 2-3 million, but the prior year was about 800,000. So it was growing rapidly.
Yeah.
With a group of people who've been there, done it before. So that's what made us try and get in a bit earlier than normal.
That's really interesting. And then, so what is it then when the sort of, agreement's done, etc.? What do you kind of then come in and do? What's the role that BGF plays?
So it kind of, there are different things we do for different businesses. It's probably the kind of the not helpful answer. But I think first of all, there's the kind of 100-day planning process, which is, there are a couple of things that flow in from that. One is we've just been through a diligence exercise. There's various things flagged, and it might be down to the level of detail, which is tightening up customer contracts and things like that, all the way through to how we're going to help with M&A or Salesforce effectiveness or build out sales team. And then that kind of help comes in a couple of different ways. One is obviously we're on the board, we're kind of helping from that perspective, and certainly from an M&A perspective. Hopefully Dob and the team kind of found it helpful, given my job is broadly that corporate finance and investment and kind of making the right decisions around that. But then there's a whole piece around our talent network. So we've got various kind of value creation tools within BGF, talent network being one. So access to people in our network to help. There's also from a kind of a lead generation perspective, we've got a very kind of active portfolio, and we kind of played in HeleCloud to a few different opportunities with the portfolio. One from a kind of a potential client perspective, others were potential kind of partners that they could work in to access different kind of markets or different client bases. You know, there's a lot around the Middle East, and one of our other portfolio companies is very active in the Middle East. So kind of getting you two together to be able to sell into them. So it's kind of, it's a wide range.
Yeah.
And I think the key thing is working with the management team for them to target which tools are most relevant and how we can help.
So you're almost, you're becoming the customer almost, for the other side of it. What were the most helpful things, do you think, Dob, looking back?
I think there was a lot of helpful things. First of all, BGF put us in a position whereby we started to behave much more like a mature business. When you've got a boardroom with experienced investors that have invested in many other businesses, you behave in a very different fashion. Your board meetings are very different.
Yeah.
And your attitude to business changes significantly as well. Then it was critical for us, having found a model that works, to be able to scale it. And we had multiple different options. One of the options, of course, was to grow the business, was to consider whether we want to expand and go into other cloud platforms, for instance. But the reality was that we wanted to be purists. We believed in AWS, which were way ahead of everyone else at that point and continue to be today. And also the whole administration of managing relationships with partners, if you need to expand onto multiple cloud platforms, is a big challenge as well.
Yeah.
And therefore,
because you were also scaling internationally at this point, which you'd say you're in Bulgaria and the Netherlands, right? Just offices as well as selling to other countries as well.
And that's exactly the reason why we engaged BGF indeed, because rather than scaling onto other cloud platforms and continuing to operate from the UK and Bulgaria, at that point we decided that we need to scale geographically, continue to do AWS only. However, expand our market footprint on continental Europe. And that's where BGF joined us, and we acquired polling data based in The Hague. And that's how we established another market for HeleCloud in the Netherlands and the wider Benelux. That was exactly the reason of the engagement. But of course, the investment from BGF went into us productizing our managed services and developing additional capabilities, hiring a sales team with a much bigger sales team, that is, which at that point was seen as an investment. And of course, then we went and developed the capabilities and managed to get to a point where that sales team started to generate more revenue. But yes, that was really the purpose of the engagement with BGF, to be able to expand onto continental Europe, develop product capabilities, and establish a sizable sales and marketing organization.
And tell us about your experience of hiring sales and marketing team.
It's hiring sales and marketing professionals is, especially when it comes to cloud services, it was challenging, and therefore we spent a lot of time, of course, finding the best individuals. But it was always the case, and that was really the case across the board. Whenever we hired anyone at HeleCloud, whether they were in sales, whether they were in marketing, whether they were technical team, whether they were in people operations and HR, finance, etc., we wanted all of these people to go through AWS training. And of course, not necessarily deep technical training for each and every individual. There was business level training as well. But we were very, very, very specific about skills. And we knew that these were skills that we could not hire with. These were skills that we needed to cultivate. And therefore, we would hire for attitude and attention, and then, of course, develop individuals by investing in their training and professional development. And indeed, we hired a sizable sales and marketing team, which ended up, unfortunately, with a significant attrition. So we probably seeded a couple of our competitors with sales and marketing talent as well. But ultimately, we found the best formula for the team and expanded it to, I think, a team of 13 by the time we were acquired by Software One.
And so what is that best formula then?
The best formula in our case was really training up the sales and marketing team on cloud services and making sure that they put the customer first and focus on customer outcomes. And it was on that basis that they were able to establish relationships. We also, I typically, when I look at a sales organization, I typically talk about transactional sales, consultative sales, and relationship sales. And these are three different types of sales, which depending on the customers and depending on the maturity of the company, you need to have the mix up in the business. And we initially started with consultative sales, but it was obvious that in order to go into the enterprise space, we needed to have the relationships as well. So we included a mix of relationship salespeople, but that effectively meant that we had salespeople that had strong relationships and at the same time probably didn't have the technical capabilities to engage with the customers. So we complemented it with pre-sales and product capabilities, and we created sales teams that would consist of relationships as well as technical knowledge. We would have relationship salespeople and pre-sales people going together and engaging with customers. And that effectively became our winning formula in the last couple of years of the business.
And is that something you spot across a lot of tech companies, those three different types of sales?
Yeah, I think that's right. I think it's true when you're trying to get that sales engine motoring in an industry where, I guess, good sales hires are expensive, making sure you're making the right investment in the right places is the challenge. And I think trying to get that mix of, you say, more kind of higher volume, less technical elements to kind of build the hopper alongside effective partner management as well. So there's some of it is pure sales, some of it's more account management when you talk about your partner base. And then you got your high end kind of senior sales capability, which you need to kind of land and close a kind of enterprise account. I think you need the mix.
Yeah,
I think that's important. Certainly in a business like HeleCloud, which was selling into a wide range of potential customers.
And this teaser, obviously, podcast is called Good Growth, right? And what does that mean to you? And I'm going to ask two sort of separate questions with it, which is, when were you growing at your fastest? And when were you growing at your slowest? And how did you mitigate both circumstances?
That's a great question. I think thinking about growth, there is probably one end of the spectrum, which is fast growth. And that's the end of the spectrum where different organizations probably frame it in a different way. But in Silicon Valley, that's what they call fail fast. And that's typically where you're growing, taking a lot of risk, plowing ahead into the unknown, trying various different things, breaking things as well, which is what Facebook have been doing for a while. But by going fast and going at scale, you are either going to be very successful or not. And it's very early in the process because you're going at scale and burning a lot of funds that you're going to determine whether the model is successful or not. If you look at it in a Darwinian fashion, that's survival of the fittest. You are going to be generating a lot of ideas. Some of them are going to be successful and are going to survive. Others are not going to survive. But effectively, through going fast and trying various different things, the fittest are going to survive and continue to be very successful. And that's what we've seen in Silicon Valley. On the opposite end of the spectrum is a business which is run very responsibly. It's a business that takes very few risks, but perhaps is such that in the much longer run is going to return value to their shareholders. And such a business would rarely be doubling, tripling, quadrupling in revenue or a number of employees year over year, other than in the very early stages of the business. From that point onwards, it's probably going to grow very slowly. And nothing bad in these businesses. Many of these businesses are run as lifestyle businesses. And of course, they may exist for tens of years and continue to grow very slowly. And they're the backbone of the economy of most countries, including the UK as well. To me, the healthy growth is somewhere in the middle between the two. It cannot be a lifestyle business because, as I said earlier, I had already promised my co-founders and investors in the business that we were going to sell it in 4 to 5 years. And no, I didn't have the option of running a lifestyle business. It was always built to be sold. At the same time, it really wasn't an option to go in a very cowboy fashion and splash a lot of money on various different things and hope that one of them is going to stick and become very successful. That was an irresponsible way of doing it. So what we did was what I would probably recommend to everyone else on a mission similar to ours, which is we reinvested every penny that we had. And of course, we took BGF on the journey, which allowed us to not only reinvest our own proceeds from the business, but actually scale it to a much more significant degree. And that was, to me, the responsible way of achieving the goal to sell the business in 4 to 5 years. And that, to me, is the healthy growth.
And you achieved that. You sold 4 days before your 5th birthday, I believe.
Indeed. We sold the business on the exchange contracts on the 9th of September 2021, which was indeed 4 days after our first working day in the main head office. 5 years down the line.
And once you'd probably got the sales engine motoring, that was probably when you sort of growing at your kind of fastest rate. When was a moment you thought, we're not growing at all here, like this is not working right? Like every entrepreneur goes through sort of dark days when nothing seems to be going right. How did you kind of correct that?
To us, we always grew, but we had a few wake-up moments and we missed our targets a lot of times. I know that, Alex, and thanks for all the support in the boardroom every time we missed them. Quite often we were overly ambitious, but one of the difficult periods of time, which I'm sure that one can use as an excuse, but that's not the reason why I'm bringing it up, was COVID. In April 2020, we had a sales and marketing engine which was operating fairly well across 3 countries at that point, or even more than 3 countries, but with solid presence in 3 countries. However, that was a sales and marketing engine which was based and very centric upon face-to-face interaction with our customers. It was a very old school model whereby our marketing organization would run events. We would sponsor and participate in AWS summits, and there was such in London and Amsterdam and various other events as well. We would have customers in our offices, and from a sales perspective, perhaps 90% of our interactions with customers would be face-to-face. We would have salespeople in cars, on trains, planes, on the tube, but interacting with customers in person. And that was a good old style relationship management for upper mid-market and enterprise customers. And we believed that that was the way to do it. April, come late March, I think it was 24th of March, 2020, when we had the first lockdown, suddenly everything changed. We had to cancel all of our marketing events. Our salespeople were no longer meeting with customers. Perhaps our customers were a bit surprised and a bit taken aback by what was happening, and they slowed decisions down. And that was really a time when, which became very challenging for us. We had to restructure the business, change completely the way we interact with customers. And of course, we had customers that were subject to pretty much the same shock system that we were subjected to as well. And it was really the time when we slowed down perhaps for a couple of months. But then we were very quick on our feet, and a month later, we already had a few ideas, which allowed us to slightly change the direction of the business, to engage with customers, including such that we had not had before. And I'm afraid I can't talk about them, but customers that were close to the NHS, which allowed us to adjust to the new reality
Okay.
and help with the crisis, and make sure that we address some of the pressing needs of COVID as well.
And how, I mean, that's one of the questions I wanted to ask. You went on this sort of 5-year journey, and 2 years of it was taken up with a pandemic. You were building a pan-European business across the cloud, etc. How do you implement culture, and how did that sort of change, like pre, during, and post the kind of pandemic?
That's a great question. And I would even look at it from a broader context, including operating across multiple countries. And also changing from meeting in person to virtual meetings as well. But culture is really the most important thing in any business. And that's something that I learned in Amazon, in my days in Amazon Web Services, which was probably the first business after spending by that time 20 years in the industry, working for various organizations, some of them large international, much bigger than Amazon, others small startups that we had established. AWS was really, and the wider Amazon was really the business where I saw culture really implemented and fully embedded in the daily life. Culture was the most important aspect of everything that Amazon did. That was the way that we would hire people, develop people, sometimes let people go, but culture was really the bloodstream of the business. And that's something that we implemented in HeleCloud as well. In the very early days of HeleCloud, we shamelessly plagiarized the Amazon culture. I simply took whatever I had learned at AWS and I transferred it over. And because we were a purist AWS-centric business, it kind of worked. But then 18 months into HeleCloud, it was
Can you
obvious.
just give us an idea, just before we get onto that 18 months bit, what AWS culture kind of looks like, right?
AWS culture is, of course, the wider Amazon culture, but it was based on 14 leadership principles. And these changed a bit. They have changed over the last couple of years. But the 14 leadership principles remain. And they include customer obsession, always putting the customer first and making sure whatever else needs to happen, that it happens, but we've got a happy customer at the end. And also designing products with the customer in mind, not designing products with profit in mind, but starting with the customer, and profits are going to come. Also, delivering results has always been very big in Amazon as well. Focusing on whatever is required to be done so that we deliver results has always been one of the leading principles, one of my favorite principles as well. Hiring the best is another Amazonian principle, and developing, of course, the best, a very important principle as well. Bias for action is another very important principle. Amazon are very open about their culture.
Yeah.
They've got the Amazon leadership principles on their website. And again, in the world of Amazon, every employee and leaders and people, managers, of course, use them on a daily basis to make decisions and develop the business as well as the people in the business. And that was the way HeleCloud behaved as well in the first couple of years, as I said, first year and a half probably. But at some point we said, we kind of understand it, but it's not ours. We've got our own identity. We're not Amazon. So yes, we absolutely abide by these principles, but at the same time, we probably see things slightly different. And that's how we engaged with our employees. And by that time, we had probably hired 30, 40 people. And we spent a lot of time getting employee representatives as well as the wider the wider team at HeleCloud, and we distilled our own culture. So we came up with 4 leadership principles, which were really about our technical competence, knowledge, and skills. They were there about us focusing on customers. They were there about delivering business results through technology. So not geeking out for the sake of geeking out, but using technology to deliver results and continuously learning and improving ourselves. And then we established the principle of trust, which was making sure that we've got glue and that we are not just a mechanical collection of people that are working together, but we trust each other to deliver results and work together towards a common goal. And it was this culture that we continued to develop over the following couple of years that became the backbone of HeleCloud. And I can absolutely say that it took us through many difficult times and allowed us to successfully grow the business and ultimately exit the business. But at the same time, this culture was still a challenge for us as well when it came to us acquiring businesses. We acquired All-in Data in 2018 and then Datastalk in 2020. And these were small organizations, about 20 people each, which had their own cultures, written or not, and their own ways of doing things. And that was probably one of the mistakes that we made back in the days. We thought that our culture is something that they're going to adopt relatively easily. We believed that because it's an honest culture, which is very orientated towards the employees, that it's very obvious to the organizations that we acquire and they're simply going to come on a journey and simply embrace it. And the reality is that a culture is like religion. It may come, however well-intended it is and however successful it is, it can still come abrasive to other cultures as well. And finding the right cohesion with such organizations is always very, very important. So the integration of businesses, and I love all the businesses that we ultimately acquired and got on board at HeleCloud. They made us a much business. But the integration process is something that we should have tackled somewhat differently from a culture perspective and made much smoother for everyone.
Okay, that's interesting. Alex, how important would you say that culture is to good growth? Like, you've been invested in how many businesses, seen dozens and dozens. Is that a common theme throughout it all?
Yeah, absolutely. It's fundamental in people businesses, in broad technology business, whether it's product or services. It's absolutely key. And ultimately, it kind of feeds into the proposition. If you get the culture right, then the proposition follows. And one of the other businesses we backed, called And Digital, they actually say it's employee first, because if the employees are happy, then the customers will get will get a good service. And I think that has been the running theme throughout all the businesses we backed. And if the culture isn't right, and as Dob says, there were a couple of times during that journey where we're trying to integrate and different cultures from the Netherlands into the UK and the Bulgarian aspects of it as well. It took a while to bed down. Once we bedded it down, it worked really well, but it was probably a bit harder to begin with to kind of align those cultures
in that period of time as well. Yes, and tell us about the Bulgarian sort of ski chalets.
Ski chalets, the vineyards, and the various other things with it as well. Yeah, so it was very important for us. And the only year where we didn't get together was COVID, and the COVID 2020. But it was very important for us, and for the chemistry between us as well, that we all get together at least once a year. And whereas I would normally travel to the Netherlands every other week and to Bulgaria every month, that wasn't necessarily the case with a wider team. And when you operate across 3 countries, and by the end, COVID had spread us into more than 3 countries. We had employees working from Switzerland, Germany, and various other locations as well. But working remotely is something that we all got used to. And at the same time, it was still very important to get together and socialize, and the cohesion between team members, and effectively team building, making sure that we are all one team and we understand each other, trust each other, and can deliver results with each other. It was very important that we meet in person as well. So we made it our habit to a ritual even that we meet every year, and we fly people from all locations somewhere in the mountains of Bulgaria. And I think the first one was in a vineyard, and at that time we were a relatively small business, 20 people or so. By the following year, we had already outgrown the capabilities and the space that vineyard offers. So we started renting some of the golf and ski hotels in the southwest of Bulgaria. That's where we did the following couple of all hands meeting. It was a great opportunity to spend perhaps an hour in a slightly more formal and more structured presentation and talk about the year that had just passed and look at the year ahead. And then at the same time, engage in team building activities, and then perhaps socialize over a few pints and food and spend time
And you
with colleagues, which eventually became friends as well.
and you invited investors as well.
BGF were the linchpin of all of these meetings, and I've always enjoyed having Alex and the team around.
Yes, absolutely. Well, I actually remember going to the first away day before we even invested. So,
Oh right,
yeah,
gosh, okay.
So we'd agreed the deal, but we needed to get some paperwork signed off. It was an international sign off of the Bulgarian side of the business, and we had to wait a couple of weeks. And the away day came, so we could have pulled out if we didn't like. But no, it was it was very good. I think it kind of highlighted some of the cultural things that Dob's mentioned. It's a very flat structure. The senior management was very accessible, and actually the participation of senior management in the activities was great. With one of the activities, which was mocking up famous film scenes.
Oh yeah.
And the whole senior management team involved. And actually, one of my colleagues who works on the deal actually did a great job being James Bond for the day. But yeah, it was a fantastic experience. And I think what Dob said about bringing people together really worked.
And how do you assess for that culture? Because it's all very well to have, we have a positive culture and all this stuff written down, right? And when you're presenting numbers and all this stuff, but how much did that kind of bring it to life, going and seeing it in person? Something, the country clearly, very close to you as a person, right?
Yeah, absolutely. I think there's no substitute for just spending time with the team. And actually, if we could go to an away day with all our prospective investments, that would be great, because it shows a whole different side to the business. And in this case, a very positive side. But yeah, it's difficult, is the bottom line. And there's no substitute for spending time with a team and actually getting to know other people in the organization.
And you had an interesting story of where you met your co-founder, Dob.
Yeah, indeed.
Not at an MBA in INSEAD or any of this.
No, and none of us is an MBA, unfortunately. We've done a lot of mistakes and learned a lot, but no, we didn't have the academic credentials when we established the business, just the best intentions and the hard work. But yes, Paul McCarthy, who became an investor in the business and our chief corporate development officer, and I met on the sidelines of the Maidenhead rugby pitches. Our sons used to play rugby for Maidenheads in the early age groups, and they continued to play until the under 16s. Paul used to coach. I used to do fixtures for Maidenhead, so we ended up meeting on the sidelines of the rugby pitch with Paul, and then at one point I convinced him to invest in HeleCloud and become an executive in the business as well.
Oh, that's interesting how it works out. And when you've got all this, and this is a final question, like, you've had all this good growth, you've done really well. Why not carry on? Why exit?
As I said, and Alex probably has his own view on that as well. But in my case, it was a mission, and that mission was going on a journey, building a business, selling it in a reasonable period of time for valuation, which we had agreed was what we were all looking for. So my mission indeed was to deliver what I had promised the investors business. At the same time, at least from my personal perspective, HeleCloud, yes, it was a mission. Every decision that I made had to be such that I can deliver the mission. It was always my baby. It was a business that I envisioned and, of course, developed, grew. And therefore, I found it very difficult when it came to signing on the dotted line to actually give it away and allow someone else to take ownership of it. And HeleCloud found a very good home at Software One, but it was an emotional, very difficult decision for me. The financial, of course, the side of an exit is very important. It was important for me as well as for the founders. But to me, HeleCloud was always baby that I was responsible for, and a child that I was responsible for. So a difficult time to get to that point and cross the line and hand it over.
Yeah. How did you feel?
Yeah, I think from our perspective, I think ultimately BGF can never dictate an exit. It's always about what the management team, the shareholder dynamic want. And there was definitely some shareholders who wanted to exit. Obviously, Dob and Stefan continued with the Software One journey. So there was definitely an element of wanting to continue the journey in some way, shape or form. I think from our perspective, probably a couple of things played into it. One, we were open-minded. We were looking at acquisition targets in the run-up to it. So there was a plan here that says, actually, do you acquire more? Go on for another couple of years. But that just wasn't where the team mind was. And that allied with a very hot M&A market, lots of inbounds that kind of got to the valuation, which meant that it was not quite tomorrow's price today, but not far off that. So do we take on more execution risk, kind of deploy more capital, go through some more kind of M&A, which has its own execution risk, or do we bank what is a good return, give Dob and Stefan an opportunity to go with Software One and see where that journey takes you, but allow others to kind of step off? And in the round, I think it made sense to do that at that time.
Dob, what are you doing with your time now?
I'm keeping myself busy. I want to be useful and make sure that I help fellow entrepreneurs. An angel investor, and I've invested in 15 startups, hopefully even 16 end of this week, which are in the very early stages of their development. And I effectively become the co-founder of many of these businesses. And I'm very, very thrilled to be able to help other entrepreneurs, hopefully help rather than interfere with what they're doing. And I do a lot more than just the investment. I try to be their advisor. I sit on their boards and chairman of a few of these businesses. I help them with connections, fundraising, and with everything else that I can. I'm probably busy 9 days a week now, but I love it.
And where can people find you?
People can always find me on my website, which is dotsventures.com. And of course, they can probably find me in BGF offices every now, because we keep the relationship with Alex, and we keep talking with Alex and the team, and look for other opportunities as well.
And hopefully one day we'll be able to back one of Dob's angel investment.
Absolutely.
Exactly. Dob, Alex, thanks so much for coming on BGF Good Growth. It's amazing to kind of hear the story. How you did it in 5 years is probably what a lot of entrepreneurs dream when they set out, and it's often not that easy. But listening to all your stories and dispensing all that advice has been will be invaluable for portfolio companies and lots of other want-to-be entrepreneurs listening.
Thank you very much for the invite and for having me, Jimmy. Pleasure and honor to be on the podcast.
Yeah, thanks, Jimmy.